Hello to everybody, our dear subscribers. FutureTrend channel is glad to welcome all of you. And today we are ready to present our point of view of how to trade major currencies in the world financial markets for the date of 17 January 2019. To say the truth, there is not much to say at the moment regarding the situation in the foreign exchange market because, as you could see, the pair still trading inside of so-called tight ranges. For example, the euro dollar still hovering about the level of 114. Probably the cable is a little bit volatile at the moment. That should be associated with the surviving of no confidence vote in the British government, surviving of the Theresa May's government. And now the question regarding the sterling crosses is what's to expect next. We suggest that despite of so-called surviving of the no confidence vote, the tough times anyway still lies ahead for the cable. Because we should understand that political system in the UK now at the so-called impasse regarding the Brexit deal, and even in case of extending the deadline that's scheduled for March 29 for Brexit negotiations, we don't expect any kind of progress in this direction. So from this point of view, probably sterling crosses should remain more or less upside potential should remain more or less limited, and even we suggest probably in the during next let's say couple of weeks the sterling even could lose some of its value against the major pairs. As regarding overall the dollar index, as you know, the dollar index during previous trading week tested its so-called 200 daily line, and now it's 1.5% above that line. We still suggest that it's a kind of correction, and now it's time to sell the dollars both from technical or from fundamental point of view. From fundamental point of view, we still continue to suggest that in 2019 the Fed will be much less aggressive than in 2018, and we don't expect any kind of cuts of its benchmark interest rate. We are not so pessimistic about the state of the United States economy. Anyway, that's possible for the 2020. Let's see the technical situation with their major pairs. As you know, we suggest, as regarding the euro dollar, we suggest to wait a little bit for a possible retesting of the tougher resistance, tougher barrier, tougher support located at 113. From this point of view, we are ready to buy the euro dollar on a possible retest of the level of 113 with a stop below 112.80. We still suggest that euro dollar should remain in the range, let's say between 113 115, probably a little bit larger, let's say the truth, 112.70 per 115.70. That's three big figures should limit the pair from any kind of penetration, from any kind of further direction. As regarding dollar yen, now we see that probably reducing the risk aversion gave an opportunity for the dollar yen to extend its current move to the upside. Anyway, we suggest that sooner or later the dollar yen will be back under the downside pressure. Also, here we should rely on fundamental as well as technical situation. As regarding technical situation, as you could see, dollar yen still trading below its 100 and 200 day moving averages. and we suggest that sooner or later the lows that were tested on 2nd of January below 105 should be retested. As regarding the cable, we already told a lot of things about that. We don't foresee at the moment any kind of further upside progress in the pair, as well as the same applies, by the way, for the euro sterling. We suggest that probably in case of further move to closer to the level of 0.87, that kind of move should give you an opportunity to buy the pair from medium-term point of view, from medium-term perspectives. As regarding euro crosses, let's see, here the situation still remains quite not easy, but quite calm, quite calm in such kind of environment after the flash crash on 2nd of January. For example, if you see the chart of euro yen, now we are in the range between 125, let's say 123 and a half. But any in any cases, we expect that sooner or later the euro yen will retest its current lows. That's why we still keep our short trade recommendation initiated at 124.80. We still suggest that sooner or later we could see some lower levels. As regarding the euro sterling, we are already told a little bit. As regarding euro Swiss, here the situation still remains quite steady. As regarding dollar ruble and euro ruble, you could see that Russian ruble is looking really very buoyant at the moment. Anyway, we are approaching a major barriers in both of the pairs. In the dollar ruble, that level located at 165, let's say even 166, that's probably the levels to buy the currency, and to expect that it should remain inside of the bigger range between 165 and 170. As regarding euro ruble, the same applies here. If you look at the 4-hour chart, first of all, we are approaching a so-called uptrend line of 2018-2019. And also here there should be stronger bids in the currency approaching the level of let's say 75 and 74. That's why in both types of currencies we prefer to buy a dip in the currency, in the euro ruble and here in the dollar ruble. Thank you for all of your support of our channel. Thank you and take care.